You're listening to the Breakthrough Investor in Commercial Real Estate Podcast. Brought to you by MVP Equity Group, where we learn from private equity experts, their mindset, and ways to achieve financial independence. Here to challenge you to think outside the box is your host, Ernest Peralta.
All right, welcome everyone. Ernest Peralta here, and today's guest is Robert Musso. Welcome to the show, Robert.
Thank you so much for having me, Ernest. It's a pleasure to be here.
Well, glad to have you on board. Just a little bit of background about Robert. He's the managing director of Tucson Properties, a privately held multifamily and mid-scale hotel investment company. Robert has many years of experience in the commercial real estate industry and has worked in the hotel and hospitality sector for over 18 years. His company now participates in multifamily syndication, partnering with investment teams and advisors on joint venture opportunities. And he currently resides with his family in New York. So with that said, Robert, I'd love for you to fill in the gap a little bit more about where you are, how did you get started, and where are you now?
Absolutely, Ernest. Again, it's great being here. It's been great connecting with you offline, and I'm excited to be a part of this podcast. So thanks again for having me. My background is interesting. I grew up in a real estate world with family. I was always involved in real estate in one way, shape, or form. My mother and father in particular were small business owners. My mother came over to the United States from Italy. My father was born in America, but he served in the armed troops in the United States Navy. And so he had a very rigid militaristic style of discipline when I was growing up. And we talked a lot of business. My father was flipping homes when I was a young boy, and it introduced me to two different avenues. My mother being an entrepreneur, owning her own business, and my father flipping homes where we lived in Long Island, New York, which introduced me to real estate at a very young age. So fast forward, after I graduated from college, although I always had an interest to be an entrepreneur myself, as well as invest in real estate, I did take the corporate America route, as you mentioned. So for 18 years, I was in the luxury hotel sector, representing iconic five-star luxury hotels and resorts worldwide in destinations such as Canada, the United States, Caribbean, Mexico, Bermuda, and overseas as well. And then at one point, 18 years down the line, I decided to take the plunge into the world of entrepreneurship. So I left corporate America and then divulged headfirst into the real estate sector. And here I am today with experience in both multifamily real estate and the hospitality and hotel sector. And now I'm trying to intertwine those two combined levels of experience into growth into the future. So that's kind of how it all started and where I am today.
That's awesome. Thank you so much, Robert, for that succinct summary of your overall experience and where you are. You know, just touching upon your background a little bit there, it's nice to meet a fellow military brat. You know, I think you and I have unique skill sets in a sense that, you know, we're used to moving around every 3 years, disengaging and engaging again. If you end up meeting the same people in another destination, I think that overlaps and bridges into the arena that we're in as entrepreneurs and as multifamily investors, is that we engage teams pretty early, build relationships and camaraderie pretty early on. And I think that's just a very good skill set to have. I used to think having a background as a military brat was a disadvantage, but over the years and now that I'm older, I think that it's a good advantage to have.
I can't agree more with that. So it's definitely, you know, there are many people in my family who are in the military as well. But it's funny, my dad has implemented so many values and just instilled certain sayings throughout my childhood on how to utilize them into the corporate world, but be strict, organized, militaristic, and focused. So it's definitely helped me out a lot.
That's great. I think that those are definitely good skill sets and values to have for sure. So, you know, one thing I wanted to ask you as kind of we head into this podcast, some of the things that I would love to focus on is not only the hotel experience that you have, but also looking at how that also bridges into the multifamily sector. So considering how COVID impacted us over the last year, there've been discussions that the hotel industry probably won't be as lucrative as it was just in terms of investment purposes, people traveling as much, and maybe things will change here in the future. But your experience, what do you foresee as far as the opportunities in the hospitality sector? And do you see any changes that are coming up here in the second half of the quarter or even till next year?
No, they're all great questions, and this could be converted into another 5 episodes. There's so much information to talk about, right? But to summarize it and keep it short and to the point, yes, unfortunately, like many sectors, the hotel sector, in several retrospects, was pummeled in 2020, unfortunately and regretfully. However, there were some very good success stories that overcame all the hurdles and obstacles of the 2020 pandemic going into mid 2021. So I mentioned briefly I came from the full scale luxury sector. Now, the hotels that I represented were very high end, had amenities such as spas, many restaurants, meeting and banquet space, restaurant space, et cetera, et cetera. So this particular part of the hotel segment was hurt probably the most or more so than any other sector. Now, I see a lot of tragedy within that element, but we're starting to see the full scale sector come back in a few ways as well. Some of the full scale hotels closed down, and the developer always finds best use of real estate when that happens. The economy and mid scale and extended stay sector have had some success stories, however. Extended stay, which has amenities such as full kitchens, 1 bedroom, 2 bedroom, suite-like amenities. They actually did very well during the pandemic, especially depending on the market location. They were used as co-working space, corporate space. People stayed overnight and utilized some of these rooms as apartments, so to speak. In the economy space, which had less amenities and less overhead costs, also did well during the pandemic in certain markets. What I'm seeing in 2021 today, with the vaccines on the rise right now, I think people are just basically ready to travel. Now, I'm referring to leisure travel. So you're seeing families now getting vaccinated and booking travel. So bookings are up, occupancy levels are up, and hotels are starting to rise in certain locations within the leisure sector, especially destinations that are close to beaches, amusement parks, universities, drive-to destinations, things of that nature. So that's very, very promising. So you are seeing revenue per available room, occupancy levels, and future bookings rising in several of these hotel segments, such as extended stay and mid-scale hotels. We're uncertain on what exactly is going to happen with business travel and meetings, but it will come back, probably not to the level of 2018 or 19, for several years, but it will come back. I'm just not sure at what capacity, because what this pandemic has done is it forced us to use technology very differently right now. I never would have thought 20 years ago that I'd be able to have a face-to-face conversation with you on Zoom like this, but now we've adapted, we've modified, we've shifted. And if we're able to be productive without being face-to-face, I think some companies are going to rethink travel into the future. I hope it gets back to normal standards pre-COVID, because I think the face-to-face is extremely important, but I'm not sure on that level. So probably 2-3 years, you'll start seeing some of the business travel and meetings and incentives come back. But leisure is on the uprise, and people are ready to travel this summer. I know I am. I finally booked my first flight. I stayed in my first hotel. I have a few destinations on the agenda. And, my wife's a school teacher, and I have 2 young boys. We're ready to travel. And I think a lot of Americans would agree that they're ready to travel as well.
I believe you. I second emotion that we finished our second vaccinations about 3 weeks ago, and I think we're just anxious to book our travels. Don't know where, but at least we know that the options are there, and I'm happy that you guys were able to book your travel and start traveling already. So it's
Right.
good to hear that the travel industry is definitely booming. I did foresee that was going to eventually happen, but I didn't know how quickly it was going to take place. But with that said, looking at hotels now, and then I've also heard even discussions of this multifamily conversions. Do you think that's still something that's going to take place here in the near term? And do you think that will actually change the way we look at multifamily and hotels? Or do you think that will take a step back now because luxury travel and things are starting to pick up?
Well, it's a great question as well. I know it's been happening, it's been happening prior to the pandemic, but it did pick up some momentum during the pandemic as well. Several associates and colleagues of mine have physically converted hotels into multifamily apartment buildings, and I know that is still going to happen into the future. So some of these poor performing hotels in certain markets were converted into multifamily. Now it's just not that simple. Zoning laws have to, make sense for those prospective markets. So some of my colleagues who are doing it on a frequent basis are working with attorneys who are, who are in, very specific understanding of the market and what zoning allows in these particular areas. So if zoning allows hotels to be converted to multifamily, then that is a great approach that some developers have been taking. You will see that. It will take away some of the hotel supply. And obviously some of these markets are allowing for more growth from a rental perspective. So it's a win-win. So at least the hotels that were going to shut down perhaps anyway are at least being brought back to some sort of normalcy through multifamily real estate. So I think it's a win-win either way. You don't want to see people lose jobs at those hotels. You don't want to see those poor owners suffer and lose the hotel, but at least they were probably able to get out of it from developers who bought the project to convert to multifamily. So I am seeing that happen all over the country, from Missouri to Florida to New England to the West Coast.
Yeah, it'll be interesting to see the dynamics of how that'll take place, especially with all the changes that are happening right now. So I'm excited to see where that's going to go.
Exactly.
Yeah, with between hospitality, I know that you're also in multifamily investing as well, and you've got a lot of experience in the hospitality industry. How does the hospitality industry compare to, say, multifamily specifically? How do you relate that in terms of assessing the risks, looking at opportunities, and what is your thought process around that?
Well, what I think is the synergy from the hospitality sector to multifamily is that I want to partner with people who have a hospitality approach towards everything and anything involved in real estate. So that could be property management, dealing with tenants, providing them with great service, ensuring that the hospitality approach is implemented into our ethos, so to speak, when we're running apartment buildings. As far as like the mesh from the investment aspect of hotels to the investment aspect of multifamily, I think everyone has a safer and more conservative approach with the brick and mortar of multifamily. I think most people understand multifamily, the brick and mortar, the rents, the leases, income and expenses. Hospitality within the hotel industry, it's not that difficult to understand the income and expenses, but it's just a different animal in general because you're selling rooms per night. You're able to control the revenue per night, and you just have a different form of sales, marketing, and operations. So there is some synergy, but they are different animals in itself. At the end of the day, it's income, expenses, net operating income, and profit margins, right? So if you partner with the right people and you understand the underwriting correctly today, and really can identify the market and the pro forma aspect of the market and the asset, I think those two asset classes are very exciting now and into the future. So,
Yeah, thank you so much. I appreciate that. Yeah, I think the analysis and like you said, the net operating income, the IRR, all of that has synergies that are very similar in a lot of ways.
exactly.
And also just curious, in terms of finding hotels, what was your route in finding, deals? Is it through brokers? Was it through off market? How were you going about how would you go about getting those listings?
Great question. Just like the multifamily sector, there are some wonderful brokers out there who actually are dealing with multifamily, but also have hospitality sectors within the firm that specializes in the hotel and hospitality sector. So your top brokers out there, and we all know all the good ones out there, they have a hospitality sector that targets the hotel and resort industry within their prospective territory and markets. We've also worked with hotel operators. Now, we've connected with several great hotel operators that have many hotels under management. And since they're connected to all of these owners, they have the pulse on when these owners may or may not be ready to sell. And so that's where we've been able to discuss some off market opportunities. Right now, we are discussing a couple of off market hotel opportunities as a direct result of that. So, hotel operator dealing with hotel owner connected to us is now providing us with some off market opportunities as the seller might be ready to further get rid of a couple of properties under their portfolio. So those are a couple of standard ways on how you can find the right hotel acquisitions.
Perfect. Thank you for that explanation. Now, moving into multifamily, I know this is an area of focus for you as well. So what current projects do you have going on at the moment?
So the multifamily sector is an interesting space as well. Unlike the hotel sector in 2020, cap rate compression and demand and supply was all in favor in the multifamily industry. Yes, certain markets took a dip in rents here and there, but we all know the broad brush stroke across the country was that multifamily was hot and heavy all 2020 into 2021. So that meant, limited supply, tons of demand, values are up, interest rates are very favorable for investors. With that being said, there was a lot of cap rate compression over the last 5, 6, 7 years that led into 2020. What we've done is we've tried taking some different approaches as well. We have been looking at off-market opportunities. We have good relationships with certain brokers, and I'm extending my relationships to some other general partners. And collectively, we found a couple of deals. Most recently, I was involved in a 246 unit in Winston-Salem, North Carolina. We're in contract right now for a 20 unit in Scranton, Pennsylvania. I also am in contract right now for a 27 unit in Richmond, Virginia. And we have several in the pipeline throughout the Sunbelt states of North Carolina, South Carolina, and potentially a couple leads in Florida right now that look very strong with LOIs out. So we have boots on the ground in various markets. We're coming up with creative out-of-the-box strategies to get off-market deals, using virtual assistants to hit the pavement for us, to look for sellers who might be interested in selling off-market. We're dealing with some property managers who have the inside scoop with some sellers where there might be some opportunities for off-market deals. And then we're all actively just networking with anyone and everyone we can to find deals. But it's a tough market out there, and you have to work smart, not just hard at looking for these particular deals. So those are some recent success stories going into 2021 that we're very excited about.
Wow, that's amazing. You have a lot of things going on. And congratulations, by the way, of having a few properties under your belt already in the process. So congrats
Thank
there.
you. I appreciate it.
You're welcome. Looking at all the successes that you just mentioned, what was one moment in time, whether it was life or business, that changed the trajectory for the better?
Well, for me personally, it came back to just how I saw the industry that I was previously in, the hotel industry. I was actually one of the long-term employees for the first company I worked for. So I was going on 13 years with the same company. And I decided, because I wasn't ready to relocate anywhere in the country or overseas where I had opportunity, I wanted to stay local in the Northeast. There was still great opportunity being in New York City, but I wanted to change it up and start working for another company. And around the time that I left my first job of 13 years with a wonderful, wonderful company, and I left on very good terms, I left to try to diversify my experience and work for different brands. But I realized that at that moment, when I left, the companies that I started to work for after my first company, there was a merger, there was an acquisition, there was a buyout, and what happened was I wound up moving to 3 different companies in 4 years against my will because of the changes that were happening. So I recall very vividly when I saw the writing on the wall for another acquisition, I decided to jump into the world of entrepreneurism and give it a shot. I said, worst case scenario, let's give it 18 months. And I could always go back into corporate America because of the skill set that I have in the hotel industry. But that moment, to your question, is when I left. When I saw the writing on the wall of another merger and acquisition, I didn't want to start over with another company. I wanted to start my own, company and create my own destiny. And that's when I, stepped into the world of entrepreneurship at that moment.
So that merger actually was the tipping point for you. And like you
Exactly.
said, you do have skill sets that you can always go back and fall back on. But it looks like at that point, you just wanted to cut the bridge, burn the bridge, if you will, and just, jump into entrepreneurship. So good call. I think that that was a good move for you. And look at the things that you've accomplished now, in spite of that. So.
No, I appreciate it. Thank you. And I know a lot of people who kind of have that same story. It's very difficult to conceive leaving a job after all that time. But you know what? There's definitely opportunity out there doing things on your own as an entrepreneur. So I'm glad I did it. And it's funny. The only regret I have is, of course, that I should have done it sooner, right? But
Yeah.
everything has its own path and destiny. So I'm very happy where I am right now.
Yeah, which was going to lead me to my next question. What was a mistake that you've made, and what did you learn from it? Do you think that not leaving sooner was one of your mistakes?
It's funny. I almost answered the question in advance, right?
Right, right.
Yeah, that was, it's funny. I see young, sharp, like-minded individuals right now, maybe 20 years younger than me. They're doing it today, sooner, and with passion and with precision and with energy and strategy. So I don't know why I'm seeing more young people take the risk now, but it was instilled, in me maybe to give corporate America a shot a little bit longer back then. But that's one of my biggest regrets, and I don't want to even say a mistake, but one of my regrets is that I did not do it sooner. But you cannot turn the clock back, and you just have to keep marching forward. But if I could do it all over again, yes, I definitely would take the plunge a little bit sooner.
What comes to mind when you said that, it reminds me of a phrase that Tony Robbins said once before is, life happens for you, not to you. So when you say that, having the experience in corporate and then not jumping sooner over to real estate, I think a lot of it were fundamentals, maybe things that you had to develop first, maybe, an experience before getting into real estate. And I kind of look at my background similar to you. I'm also in the corporate arena, and hopefully soon I'll be able to transition out from my W-2 into full-time real estate. So I'm in that transitionary period. You've mentioned some things there that I think is where I take a retrospect of why isn't it that I didn't jump into it sooner myself? And I think over time, it's just the skill sets that I think I'm still developing before I can actually migrate or jump over full time into that arena. Another thing to your point that you mentioned is you're seeing younger people getting into the arena, investing a lot sooner. The millennials seem to be taking a look at this a lot closer. I think a lot of it is just based off of being able to educate people, maybe folks like that are in their mid 30s, maybe mid career in the corporate world, if you will. And I think the younger millennials have taken a hold on entrepreneurship, I think a little bit quicker, and to look at alternative investments. I think they've been attuned to that a little bit more than those that are maybe more experienced in their career or not. What are your thoughts about that?
No, I agree. I'm working with young millennial investors right now who I mentioned have, such drive, such passion, and certain skill sets. I believe in building a team and building, a team like if you use a sports analogy, and I grew up playing sports, I love sports, and I commonly, as many of my colleagues always say, I use sports analogies for a lot of different elements. We have to build a team, and everyone has a different skill set. And I've been working with a lot of millennials on a general partner side. There's a lot of millennials who are investors, and then most of my assets have this, a very big millennial base as far as the tenant base is concerned. So I think a big example today is that obviously we've been in a hot market the last X amount of years. So my age now, I've been through several different cycles, both up and both down. But over the last 6, 7, 8 years, we've seen, an upward trajectory, in the real estate market. So the sky has been blue for quite some time. And so it's been, I'm not saying easier, there's been more opportunity to get involved with the upward swing. And right now I am partnering with many different people in the millennial era right now on general partnerships, key principal partnerships. There's a lot of limited partners. So it's been working out really well for us, and everybody has a different skill set. The technological advantages have been such a phenomenal aspect of real estate, because whether you're in Seattle, Washington, New York, or Tampa, Florida, We can all get together at the drop of a hat. We can analyze and underwrite deals together. Everyone's skill sets could be used accordingly. And when we're ready to attack an asset or partner on a deal, we can all jump on a plane or take a drive, depending on our logistics, and get the deals done. Everything just has such influence with the technological advantages of today. So I think that's been a real key factor as well.
Very good point. And I think because of, say, it was a benefit, something that COVID perpetuated is bringing individuals that are in real estate. I know it wasn't so heavy in technology before because a lot of it is interpersonal skills, meeting people in person. But I think technology is bridging everybody across the country a lot quicker, more efficient. And I think business can be done a lot more efficiently this way versus traveling and meeting people one-on-one. Although that still is going to happen regardless.
Absolutely.
I don't think that's ever going to go away. This just adds another avenue to being connected with people.
I can't agree more. And it allows us to work smarter and more effectively. And I do speak about that a lot as well, where, working hard is a common phrase that a lot of people say, but working hard doesn't always produce great results. You have to surround yourself with the right team. You have to all have the right skill sets. And instead of marching in different directions, you'll have to march down that same path on that common goal. So technology helps us. Technology is there to help us work smarter, more effectively, and maximize results. And that's really what it's happened with. And a key thing too is to surround yourself with positive people. Remove yourself from the negative people, surround yourself with the positive people on all levels. And that is contagious. And when you have that type of synergy within a team, that's when you can win a championship. So, that's really been successful. So
I like that. Yeah, I always try to, I like that last point that you made, always surrounding yourself with good people. I always make it at least a habit to reach out to one or two, three people a week that are within my arena, just surround myself with positive, like-minded individuals. Because I always want to be the least knowledgeable sometimes in my group so that I could learn as much as I can about my field. Yeah. So one thing I wanted to ask you is what's one common myth about being in real estate that you'd like to debunk?
That it's one common myth that I'd like to debunk. Well, one common myth that I'd like to debunk is the fact that it happens overnight. One asset's going to change it. It takes time. So it's not about timing the market. It's about time in the market. So if you're able to create a strategy and stick to a plan and just be patient and allow the movement of the market to help force appreciation on assets that you acquire, I think that's what's going to really create cash flow, equity, and generational wealth. Don't try to time the market. It's a very difficult aspect. I think there's opportunity in every market cycle. You just have to be in real estate for the long term. And it's not an overnight success story. And I say that because within many groups I'm in and within many webinar calls or conferences, I feel that a lot of people who are getting involved in real estate think it's going to happen overnight, and it's just not the case. So I would probably say that is the biggest, concern when I talk to people who think it's an overnight success situation if you just hit one or two assets right. So.
Yeah. Thank you. Good point. I really appreciate that. And I think that is definitely high on the list. So appreciate you mentioning that.
Absolutely.
So where can our listeners learn and connect with you?
I would love for listeners to connect with me through my website. We can schedule an appointment or discuss any opportunities to partner with one another. My website is TucsonProperties.com, TUSON Properties.com. And I'm happy. I love the face-to-face Zoom calls, phone calls, and if anyone's in my jurisdiction, so to speak, logistically, I love. I've been getting out there and doing the handshakes and face-to-face coffee, lunch, and dinner meetings. I'm finally getting back into it, which has been great. So appreciate that, Ernest.
Yeah, you're very welcome, and thanks a lot. So, is there any questions that I didn't ask you about the business that you think might help, our listeners, those that are either aspiring or those that are experienced investors?
I think that, I briefly mentioned to you in past conversations that I'm just not a real estate syndicator. I diversify in several different aspects. So right now in my current portfolio and my past experience, I am a general partner and key principal. I'm also a limited partner where I passively invest, and a hybrid of being a general partner and limited partner. So I'm interested in working with people on many different levels. So if you're a passive investor, I'd love to work with you. If you need a joint venture with someone with experience on the general partner side, I would love that as well. I have property management experience, construction management. I have a deep pool of investors where networking kicks in and capital raise comes into play. So there's a few levels that I can assist with on several assets on several projects. So I appreciate you asking that question. If anyone's interested in discussing anything further, that's what I'm all about. Everyone mutually benefits on that same common goal of growing cash flow, growing equity, growing generational wealth. And let's face it, we all want to just enjoy life, be happy, and work with great people around us. And that's really my mantra, how I try to live the day by day.
Yeah, very good. Thank you for clarifying that. And I couldn't agree with you more. Our last question is more of an action, if you will. What actionable advice you learned is the most important pattern of behavior that a new investor must take or do for them to take that next step towards their goals?
Great question. And I just discussed this last week, ironically, with someone who is new to corporate world, new to real estate and wanted to jump in. I think that my best advice, and I basically did this myself, was I put together a smart strategy and action plan to accomplish my goals. Specific, measurable, attainable, in a time realistic fashion, where all of those particular goals were set on paper monthly and quarterly and annually, and then I attacked. So I commonly see loose ends or a loose action plan, and what happens is you get scattered, unfocused, and unorganized. So if you're going out there and you want to attack and achieve your goals or exceed your goals, put together a very, very smart and realistic action plan, and then try to set all those steps to attain those goals. So that's what I've been discussing a lot with investors who are interested in growing their portfolio, growing cash flow, or leaving corporate America. It applies to everything.
I love it. Yeah, thank you. I love SMART goals. Is that something that you put or have implemented in a 90-day plan?
Yeah, great question.
Yeah.
This goes back a long time for me. This goes back to the late 90s when I started talking about the SMART strategy. So I put them into 90-day action plans. And with real estate, yes, I do that quarterly as well. We're looking to achieve another 50 units within the next 120 days. Let's strategize step by step and attack. Or last week, as I was mentioning, I spoke to a couple of gentlemen who were in corporate America and wanted to leave, and we were putting together goals, and it was in an 18-month action plan. So it could be implemented into several strategies specific and tailored to what you're trying to accomplish as an individual, because it's not about what I think should happen for you. It's always about you, the individual. What are your goals, and what are your what's your vision, short term and long term. So that 30, 60, 90-day action plan or 18-month action plan, it's very, very important to set in stone so that you can follow it and exceed those goals.
I couldn't agree with you more. Having something concrete written down, and if you follow that approach, it gets you that much closer towards your goals that you want to accomplish. So I know just talking about it doesn't accomplish it, but having it written down and just following it through really makes a big difference. Robert, again, I really appreciate, taking the time out of your busy schedule to be here today to share your experience. And there's so much valuable information from both a hospitality and multifamily perspective and things that you're working on. I just want to say congratulations to, a lot of the things that you have on your plate and the endeavors that you have for the future as well.
Thank you so much, Ernest. I really enjoyed being on your show. Good talking to you personally and professionally as usual. And I wish you nothing but the best. I hope to speak to you soon.
Thank you so much, Robert. I appreciate that. And thanks, everybody. And again, until the next time, have a great week. Bye. Thanks for listening to the Breakthrough Investor in Commercial Real Estate podcast. If you like what you heard and you found value in this episode, we would really appreciate if you would give us a rating and a review. And don't forget to subscribe so you don't miss the next episode. For those of you that are interested in investing passively in these types of deals in solid cash flowing commercial real estate throughout Arizona and Texas, as well as Idaho and Colorado, then visit us at mvpequitygroup.com. Fill out the investor interest form. That's mvpequitygroup.com. If you close on a multifamily deal or any other type of commercial property in the past 12 months and you want to be on this podcast, then send us an email on our Contact Us page for details. Thanks.